Hey, good morning and welcome to Ticker Pulse. I'm Alex Grover, the founder and creator of Ticker Pulse app, and I'm an independent stock investor. And in my daytime job, I'm also an IT project manager. One of my 8 viewers, gave me my first comment, and he asked me how I would invest $500 today. And just remember, this is not financial advice. This is just my opinion. You need to do your own homework and your own research before you go and lose all your money. So let's get right into it. I start my day out checking the macros. So every video we'll do this. So the 10-year US 10-year Treasury, let's take a look at that. It's ticking up. That was expected because we see oil prices have spiked off because of the war in Iran. We had a sudden move up on the oil prices, and we're getting some fear and greed here going. Let's look at the long timeline view. So fear is building. We're in greed, and it usually just dives off. People are really greedy, and suddenly they become really scared. So, I would actually be looking to buy, easily, steadily. But I was asked about how to invest $500, and I put the stipulation that would be today. So let's just make the assumption today. But it looks like we're going to have a bit of a red day, so this might be some bargain hunting. So $500, the themes I'm looking at, I'm probably going to go with ETFs, more ETFs than stocks, a mix of both, but more leaning towards ETFs because you get the basket and the pricing is better. A lot of individual stocks are right around $200-$300 a share, so you won't be able to diversify your $500 too much. So I would recommend going with ETFs. And we're going to take on more risk. I would handle this $500 differently than my own personal nest egg, because this would be like just getting started and stuff. You have to take a little bit more risk if you're young and getting started. I mean, this is, like I said, this is just my opinion, but it has to be calculated risks. You have to know what's going on in the macro. You might just sit it out a few weeks. If we were way up here on greed, I would say just sit on the money until things start coming down. We're moving into this fear direction. I'm taking a 5 to 10 year outlook on this. I'm not going to gamble this in options and try to double it or triple it or whatever, or grow it quickly in options and have that chance of expiration risk and losing everything. So the portfolio we're looking at, we're going to be 32% in tech and AI, about a third, not everything and not nothing. I believe there's still a lot of legs to the tech and AI story. We're not anywhere near the .com valuations, but there's still concentration risk. But I think you need to be in it. I've scaled back on my personal portfolio. I was 100% in tech and AI, and I've spread it out a bit. All right, so here is the portfolio. The first theme is tech and AI, and it's not in the order of concentration. It's just in the order of the themes that I find most interesting or how I prioritize. So I still believe tech and AI is a thing. I mean, it might be some concentration risk or what have you, but I think we need to be there. So I invested in SOXQ and DRAM. So one is the semiconductors, and SOXQ has Micron. DRAM is more of the Korean memory people with some Micron. But let's take a look at the SOXQ holdings. There's a lot of good quality companies in the SOXQ ETF. Let's take a look here. So here, we have Micron, we have NVIDIA, we have Broadcom, Intel, Qualcomm, Texas Instruments. We have a mix of the new guard and the old guard. All companies you've heard of, there's Lam Research and KLA, which aren't so talked about, but they do come up. Interesting companies. I'm sure ARM is in here, but not at such a high holding. So this is a good, safe basket. I mean, it's going to have some volatility and everything, but these are all well-known companies, well-run companies, very smart people. Looks like we are already up in the pre-market. I put it in the price at 97. And let's take a look at the DRAM holdings, DRAM ETF holdings. The memory shortage is real. So you have your SK Hynix, your Samsung, you have some other ones, SanDisk, Micron, Seagate. So I do want to be in the memory game. And then I go into pharmaceuticals, because that's the other place where you can get some really big medical breakthrough, and then things could go up like a lot. So CRISPR Technologies to me is the most innovative pharma company doing the gene therapy, working with your genetics to solve certain diseases. They had a solution to sickle cell anemia. I've done some deep dive in the past. I just don't remember everything. I'm a bit older, but it is innovative. They're based in Switzerland, and they have come up with treatments They've been kind of stuck going sideways, but if they get some breakthrough or some more approvals, I believe this could really go up. It can also really go down. It is risky, but from a 5 to 10 year perspective, I believe it's a good company. And I was actually sitting next to a doctor on the plane yesterday. He was a consultant doctor, coming from Warsaw, Poland back to the U.S. And he told me, when I asked him, what do you think of CRISPR? He's like, his first reaction was like really good. He said they're going to do something. So always, talk to the people on the flights. They might know something. The other theme I get into is financials, XLF. And I like this ETF a lot, XLF ETF Holdings, because it has Berkshire Hathaway in it. So this one acts as ballast. This will give you some ballast. There's some quality into this company here. They have very solid holdings. Let's take a look. So they have Berkshire, JP Morgan, Visa, MasterCard, Bank of America. These are kind of companies you steadily invest into over time. For your 401k, your IRA, and over some 10 years, they will do very well. You have all your big names, Goldman. I think you got to have this in your portfolio, even if it's not hyperactive, because there are times it can really move. If we get into a crisis, and then we have demand destruction, like we have high inflation, then it starts going into unemployment. We get demand destruction, and they need to do stimulus and lower interest rates. This is the ETF that will take off. And then I have the doomsday, the gold miners and Bitcoin. So I believe that not all the risks are known, and something can happen. This is also kind of add ballast to the tech holdings I have and the pharma holdings. So I'm like 42% in tech and pharma. And so this is gold mining offers a dividend. But the thing about gold mining stocks in general is they outperform gold in an uptrend by 2x usually. And if gold prices keep going up, these mining companies suddenly have access to more gold that was too expensive to get before. Their whole balance sheet could change. And then IBIT is a Bitcoin ETF. And unless you want to go down to the store and buy some, but then you're going to pay a lot of fees and everything. This is probably the most efficient way to buy Bitcoin, is the BlackRock IBIT ETF. And to round it off, the speculation, this is the way I'm playing space. I'm doing RDW. I've been getting slaughtered with this. I got in at just under $20, and then they said they're going to dilute. I sold some covered calls and then closed them. One crashed, came down, so I was able to make money close, and I reopened another covered call, hopefully getting my cost basis down. My cash secured put is at $17 in like 3 or 4 weeks. So if this is below 17, I'll have to buy the shares at 17. And then I'll just sell covered calls on it. But long term, I believe Redwire, if the space thing is somewhat real, they're going to go up more than SpaceX, let's say, because this is like a $3-4 billion market cap company, and SpaceX is like close to $2 trillion. RDW is trading like 8 or 10 times revenue. They don't have profits either. They're like a mini SpaceX, like just a miniature one, like a baby one or something. They make parts and stuff for satellites. So they can go up more. If SpaceX starts going up, these guys will go up more than SpaceX. And it's $3-4 billion, so maybe they'll get acquired. Maybe Berkshire Hathaway or something will take a dive on them. So I see a lot of potential with this, but it's a risky bet. And then there's a little bit of slack here. I left you with like $9.50 cash, in case these prices fluctuate during the day when you make your trades. This is what I have. But you need to deep dive and research all of these companies here. And when you make a bunch of money, let's say this all shoots up, move out, rotate from the speculative side, sell that stuff off, take your profits, get some more conservative plays, get into more XLF. That's how I would do it on a good day. Maybe pick up some more Bitcoin. The deal is with Bitcoin, it's following all this pattern, like it goes way up and then it crashes, stays quiet for a few years, and then it shoots up. So I would actually put Bitcoin here in a longer term investment now versus speculative, because it's so far down off its highs. It can go down more, and it's somewhere in the middle. It's like in a gray area. And if you get even a little bit extra money, then start like just slowly hitting the principal on your mortgage. You could raise up your GDX holdings. That might be another one if this thing really goes up, the speculative ones 4x or 5x or whatever. There's this rotation strategy. That's something you've got to figure out for yourself, but that's how I do it. And just remember, none of this is financial advice. Please take a look at my app and give me a like and follow. But anyway, that's all I got today. Thank you for your time, and we'll see you next time.